The Gartland Group presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hi, everybody. Welcome to Taxes, the IRS, and You. We like to call it a different kind of show. Hi, I'm Bernie Gartland. I am your host for Taxes, the IRS, and You, and one of our panel members who is usually here every single week is Dave Wiesen from Gartland Law. And in a moment, I'm going to introduce you to him, and he's going to talk to you about something very, very important that you need to know. But I want to do a little housekeeping, little housekeeping first of all. You know that Gartland Law has been around for a long time. We also have had American Tax Centers and Gartland Law, and now we have a new company called Griffin Bookkeeping. And what we've decided to do, because we know that all of you out there either have financial problems, tax problems, foreclosure problems, or what is cancellation of debt problems, all these situations that you do not know how to handle. So we have developed what we want to call, and I really don't like this expression, but it's true, a one-stop shop. And what we've done is we've put together the combination of these, and we are now called the Gartland Group. Now, you're going to see our advertising on television and also here on the program, the Gartland Group. Now, what do we consist of? We consist of American Tax Centers, Gartland Law, and the bookkeeping company, Griffin Bookkeeping, so that we can do your QuickBooks, we can do your bookkeeping, while we're doing your prior year tax returns, while we're doing your bankruptcy, because Gartland Law does bankruptcy also. So just to let you know that you're going to see this name all over town, the Gartland Group. We can do all your work for you. Remember, there's over 31 million people that have not filed tax returns in 3, 4, 5, 10 years, and that's according to the IRS. And in the Gartland Group, we can solve all those problems. Well, David, you are one of the tax attorneys at Gartland Law.
Yes, I am.
And you've been doing this kind of work for now about 2.5, 3 years, and you know all there is to know about all the problems with the IRS. Well, almost all the problems, okay? What we have seen over the years is that people get in trouble because they haven't filed their tax returns, or they have filed their tax returns and they owe money, and they don't know how to handle the collection field. We have found the combination of ATC, Gartland Law, and now Griffin Bookkeeping, that we can handle these problems. But there's something else that is very, very important. The national sales organizations that people see on television all the time, and by the way, we're going to do a little bit of expose on one of our future programs on the national sales organizations, but they advertise to get people in to do, quote, pennies on the dollar. That is normally called an offer in compromise. And they lead people to believe that everybody qualifies for an offer in compromise. Everybody qualifies. We're going to do your work for you. We're going to do this. And again, on another program, we're going to talk about this expose on these national sales groups. But don't you think it's important that people understand, first of all, what is involved in the collection work by the IRS? How does one get into a situation where they owe this money? And what happens? Who's assigned? Is there a revenue agent, a revenue officer, an appeals officer, group managers? Is there something called ACS? Is there something called the offer compromise section? What goes on in collections? And then you know and I know from a previous broadcast that we had that we say to people, there's a 3-part problem-solving process to solve all their tax problems. And then we present in the third process, we present about 7 different options on how to handle them. Now, we have talked about that before, and I want to isolate now on talk a little bit about the collection activity, and then we're going to segue into what is an offer in compromise. Why has it not been successful, even though these sales organizations say it's successful, when we know, what, 15% have gone through? Okay, but that may not be anymore. We are now in an enlightenment area of the commissioner, who I sit there and I applaud, because some stuff that he has done over the last 2 years has been incredible. So anyway, tell us a little bit about the collections and what happens, how people get there, so we can start working on what is an offer and compromise.
Sure. What I'd like to talk about, first of all, is how we get our clients.
Okay.
We generally get our clients in one of two ways. One is they've received some sort of a notice from the IRS or some other taxing authority,
okay,
saying, hey, you owe us money, hey, you haven't filed a tax return, or hey, we're examining one of your returns and we need further information in some way, commonly called an audit. So that's one way that we get our clients. Another way we get our clients is people's conscience. They know they haven't filed a return.
Non-filers have a conscience. Okay,
the procrastination kind of gets to them, and all of a sudden, they see a commercial or they hear something about our firm, and they go, "Hey, I'd like to kind of get a checkup as to what my situation is. Is the IRS coming after me? Should I get these tax returns filed?"
Right.
So those are the two most common ways that we get clients, either from a notice from the IRS or their conscience.
Right.
Now, what do we do, and what's the latest situation? Collections from the IRS is they're sending out the letters. And one of the latest things that's been happening since 2008 under Commissioner Schulman is there's something called the Fresh Start Program.
Mm-hmm. Mm-hmm.
And the initial part of the Fresh Start Program was helping people refinance their homes and getting liens removed so they can do that. The next part was assisting people getting into streamlined or installment agreements, and if they made automatic payments, getting liens removed. And again, enabling people who owe money to the IRS and can't figure out how to resolve it to actually get themselves in some sort of a payment plan. Those payment plans are usually for people who owe under $25,000. It's more simple to get them an installment agreement, and then up to $50,000, there's a simplified installment agreement form that's been developed. But what we're going to be talking about today is for people who owe so much money to the IRS, and so much money is relative. For somebody, $10,000 might be too much money to ever be able to pay. For other people, it might be $100,000 or $200,000. So there's the Offer and Compromise Program, and that's the situation where you owe some amount of money to the IRS, and you make an offer to them to reach an agreement to pay it off for less, either in a lump sum payment or over periodic payments.
Of time. And by the way, you're going to cover that in our next segment, because that has changed a little bit. It used to be they wanted to be paid whatever the dollar amount is within 90 days, and they started looking at future income, and they started looking at dissipation of assets. Somebody gets rid of an asset, and they take in consideration and say, oh, well, because you've dissipated your asset, we're not going to do your offer based on public policy. But it's very interesting. In order to do an offer and compromise, which we're going to cover in just a moment, you have to be in compliance. So, and that is the whole concept of what this Gartland group is all about. You come in because you have a tax problem, you haven't filed your tax returns, and you want to do an offer on what you owe. So we get you with American Tax Centers to do the tax returns, and then your bookkeeping is atrocious. So we get your bookkeeping up to date with our other firm, it just makes sense. The one-stop shop. Now, when we come back, Dave, we're going to go into what is an offer and compromise. We know now that we need people to do an offer and compromise if they qualify. And I want to point out that that's what we're going to talk about, if they qualify. So when we come back, we're going to talk to you about how you qualify and what an offer and compromise is all about.
Hi, I'm Al Geiberger. As Mr. 59, I can teach you how to get out of trouble on a golf course. But when it comes to trouble with the IRS, I can't teach you a thing. That's why I went to someone I knew I could trust, Bernie Gartland and the Gartland Group. After seeing how they solved my IRS problems and handled my tax preparations, here's my tip from Mr. 59. Don't take your tax returns to anyone else.
If these 4 areas are controlling your life, Let me show you how through either a Chapter 7 bankruptcy or a Chapter 13 bankruptcy, we can put control back in your life and have that control give you a future. Call me today for a free consultation. Hi, everybody. Bernie Garland. Welcome back to Taxes, the IRS, and You. David Wiesen, who is one of our panel members from Gartland Law, is here. We're going to talk to you about offering compromises. One of the areas I want to caution you, ladies and gentlemen, is that, Dave, we have already said that over the years that the Gartland Law always had about a 98% success rate with offering compromises. And I always say, you know, if somebody tells you that you have a 98% success rate with anything, you better pick up your material and run out of that person's office. But there's a reason for it. We do not do an offer and compromise if we don't think you're going to be qualified for it. And sometimes we have to get this into the head of the client. If you don't qualify, we're not going to do it. The national sales organizations, because they don't have other options, because they're not lawyers, they can't give legal advice, so therefore the whole concept is to get you in an offer and compromise whether you qualify or not. So there are three major revampings that the IRS has done in the Fresh Start program, and one is the $25,000 streamline plan, the $50,000 streamline plan, and then the offer and compromise. Why don't you give a very brief analysis of the $25,000 that you don't need the financials or anything, and the $50,000, and why Schulman, the commissioner, is just unbelievable. He's so progressive now, and then the offer. Let's go into the offer and compromise.
Sure. The Fresh Start program, the streamlined aspect of it for people who owe less than $25,000, basically you can set your own terms of your installment agreement, so long as you're able to pay off the liability within a time frame. What that time frame used to be when I first started
5 years,
was 5 years, and what they've done is they've extended it to 72 months or 6 years.
That's incredible, isn't it?
Yeah, it really gives people a great opportunity to resolve their liabilities. But one thing that you need to do is you need to pay enough money that you're going to take care of the interest and penalties, because it would be awful to get yourself in such a small payment plan that at the end of the time you haven't actually solved the problem.
And I don't know whether the government has a great new heart, or they just figured out they need the money.
Yeah, and one thing that I think is always interesting when dealing with an installment agreement is you need to be aware of how long the IRS has to collect on an assessed liability. Right. And they have 10 years from the date of assessment to collect. So sometimes when setting up a payment plan, you can kind of interact with that CSED date or collection expiration date.
Right. And the interesting thing is whether you use the $25,000 limit, which anything under $25,000, if you set up the streamlined plan, now $50,000, that they don't ask for financials, and they don't file a lien, and they don't attach your wages. And the wonderful thing is that when you talk about the statute of limitations, it doesn't interrupt the statute of limitations from running at all. Now, an offer compromise does, but not an installment agreement. So you can be paying on an installment agreement, and the statute runs, Section 6502 of the Internal Revenue Code, and you don't owe it anymore. So now we know we have the streamline plan we can always rely on. Let's go into the particulars and the specifics of offer compromise.
Well, actually, before we do that, there's under $25,000, you set your own terms, no problem. Over $25,000, between $25,000 and $50,000, there's a simplified financial form that you fill out. You still need to know. You still need to let the IRS know what do you get paid, and whether you could just pay it off in the next 90 days, and how many vehicles you have, and whether you have health insurance. But it's a much simplified form from the form that we use every day when we're dealing with a specific revenue officer or a specific person who's been assigned collection on the case.
We don't want a revenue officer showing up at the client's front door.
No, we don't. But what we've been finding lately is a lot of revenue officers being assigned to cases when they're getting close to the collection expiration date, because they want to see what can they get before collections expire. In fact, a revenue officer asked me the other day, Dave, would you waive the collection expiration date?
Oh, nice try.
I said, I'm really not interested in doing that. But so the new Fresh Start offer and compromise is really, really exciting. And the newsletter or the press release pertaining to that just came out on May 21st, 2012. So this is really, really new stuff. There's several offer and compromises that I'm working on right now, and we never even would have considered an offer and compromise with these people 4 months ago. So what this new Fresh Start offer and compromise is doing is, as you said before, instead of looking at the possible income that somebody has for 5 years, you look at their future income for a shorter period of time. 2 years if you're going to do a periodic payment, or 1 year if you're going to be doing a lump sum payment.
Okay.
So, and again, so what an offer in compromise is making an offer to the government where they may agree with you to settle your debt for less than what you have been assessed. And some of the changes that we're excited about was that future review of income has been decreased as far as the length of time from 5 years down to 2 years or 1. That's one thing. The other thing that we're very excited about is that before the IRS wasn't really particularly interested in some of your expenses that you had, such as federal student loans, amounts that you owed to other taxing authorities, amounts that you owed on credit cards. Now you can put under miscellaneous what some of your other expenses are, particularly the student loans. This is big news.
It's big news.
There's another thing for businesses or businesses that are in business. If they have an asset, let's say like they have a widget producer that's worth $100,000.
Okay.
In the past, you would have to include the 100% of that value of that widget maker in compiling or computing your offer. Now you look at what kind of income is generated from that widget maker. If $10,000 a month is generated from that widget maker, you don't have to include the $100,000 and the $10,000 a month. You can just include the income that's received from that widget maker rather than the value, and that's
as a part of your gross income.
That's a huge thing.
Instead of the IRS saying sell that asset and give us the money, they allow you to produce income from that asset.
Yeah, so that's really huge. And the national standards are the allowable expenses that the IRS gives taxpayers when you're negotiating with the IRS. That's like amounts that you or your family can pay for food each month, clothing, rent or your mortgage, vehicle expenses, out-of-pocket medical. So those amounts have been expanded, and there's some new standards that just came out.
And those are the standards that are allowable expenses that are used to calculate whether you qualify or don't qualify for an offer compromise or how much. And the interesting thing is that the thousands of clients that we have seen over the years, and I do mean thousands, I don't remember one of them ever saying, "Oh yeah, they're fair," because they're kind of offensive, but people have to understand why the national standards came into place. And I was there in 1988 when the IRS, the attorneys, and the CPAs got together, and they said, because there was so much disparity amongst the revenue officers assigned to the cases. We had one lady in San Diego that allowed each adult in the family $100 a month for food, and the children $50 a month for food. Now, obviously, I found out where she was born and raised, and that's what they lived on, okay? But the national standards came in because each revenue officer had their own particular whims and desires. So now, when we get back, we're going to talk about what are the qualifications of an offer and compromise and what kind of offer compromises. There's two basic offer and compromises, and we're going to we're going to be more definitive on how these national standards work and what are the qualifications and why people can or cannot qualify. So when we get back, we're going to go into our last segment, ladies and gentlemen, and you're going to learn everything you need to know about offer and compromises. So we'll be right back. Hi folks, I'm Bernie Gartland of the Gartland Group. I want to introduce you to our tax expert of that group, Brian Bauer, who's also the CEO and enrolled agent of that group, American Tax Centers.
Well, you know, Bernie, American Tax Centers prides itself on doing your tax returns accurately. As a former tax auditor with the state of California for over 20 years, who better to handle your tax audit?
Let us put control back in your life and have that control give you a future.
Call today for a free consultation.
Facing bankruptcy has led many people to believe it was the end of the line, when in fact it was their doorway to a new beginning. Hi, I'm Bernie Gartland. For a full explanation of what a Chapter 7 or a Chapter 13 bankruptcy is, call me today for a free consultation. Hey everybody, Bernie Garland. Name of the program is Taxes, the IRS and You. We call it a different kind of show because each week we present to you information that, number one, is very important, very pertinent, but sometimes you're not even aware of some of the things that we talk about. So, we welcome you to come here every Wednesday morning to watch us because we have interesting information. And by the way, one of our upcoming programs, we're going to have Mr. 59 himself, Mr. Al Geiberger, is going to be interviewed. And you do not want to miss that show. All right, David, we're talking about, you're a tax attorney with Gartland Law, and you've been doing these offer and compromises for years, and we've watched them change. Now, folks, I'm going to tell you about the two different types of offer and compromises so that Dave gave you an overview, what we call the 38,000-foot overview. We're going to get into very precise, specific areas. Number one, the area that we normally deal in is called an offer and compromise as to doubt as to collectability. And that's very important. Because I still hearken back to the J.K. Harrises and Tax Masters and Ronnie Lynn Deutsch and all them doing their offering compromises, and you don't qualify because you have too many assets and too much income to qualify, but they'll take your money anyway. We will not do that. But it's incredible of what Dave has researched and brought up to date, and that's why we're doing this program, because everything has changed, and the commissioner is making this easier. Doubt as to collectability, and we're going to go into that in a minute. I have a client that just came in the other day that the IRS has on record on their earnings statement, that what we call IRP information, Dave, that each year he's earning about $106,000 in Texas. The guy lives in India, and he works as a mechanic. And they got him in some company out of Texas and a couple other companies and everything. In other words, he has identity theft. So what we're going to do is, it's been very difficult to get to the IRS on his part. All right, so we're going to do a offer in compromises to doubt as to liability.
So that's a different kind.
It's a totally different kind. So folks, you need to know there's two major areas. Doubt as to liability, where you say, I don't owe this money for these reasons, and identity theft is one. The other is doubt as to collectability. And let's go very kindergartenish. I always go column A and column B. Column B, what is your gross income? Minus your business expenses if you have a business, minus your legitimate personal expenses that qualify under the national standards. And what is left over? It used to be you had to multiply that by 60. Now, Dave, you've researched and you said it's only 24.
Yeah,
what a saving!
Less than half.
Whatever, and whatever that is your first basis of your offer. Then you add that figure to whatever dollar amount of equity you have in any assets. And let's say somebody does not have a home with any equity in it. Okay, but they got a car fully paid for that's worth around, legitimately, $5,000. So you have to take the $5,000 plus whatever 24 times whatever left over. That's your bid. That's what you get to the offer compromise. And it's very simple. That if all of a sudden you got like these national organizations we're doing, we had one guy that had over $300,000 of equity, and they were going to do an offer and compromise for him. And we will not do that. If you do not qualify for an offer and compromise, there are other options that are available to you that we know about. But in this offer and compromise segment that you have done the research on, these new concepts, are there more things that we should know about that you have researched that we haven't talked about so far?
I think we've basically covered it, but I just think it's just important to just be cognizant of the fact that you can include the minimum payments on your student loans if they're federal student loans. You can include other expenses that weren't considered before. And not all assets have to be counted. Now, this isn't the same as like in bankruptcy where there's certain assets that are exempted. But if you have a business asset that actually generates money, then you can do an analysis of that and say, hey, compared to what the value of it is, what does this asset generate?
Okay. Now, the interesting thing is that I'm going to have a little poetic license here. I'm half Irish, so I embellish things a little bit. there's a lot of people that come in to see us, and they have already been contacted by outside companies, and they have it in their mind that they want to do an offer in compromise. And what I want to do is let the folks know, I'm going to say this over again, if you do not qualify for an offer in compromise, we will not do an offer in compromise for you. And sometimes, Dave, and you've been there, when we're interviewing people, and they're saying, well, that's not what I was told. They told me I qualified. First of all, they say the IRS told me I qualified. No, the IRS doesn't say you qualify. What they say is we have this program available, but they misinterpret. But the other thing is the national sales organizations have gotten hold of these people and say you qualify. So they want to come to see somebody local like us, and they have in their mind, they're going to do this offer in compromise. And I sit there and say, you're making this amount of money, you got this asset, you got that asset, this asset, you do not qualify. We need to talk about it. Well, I've been told, and I said, all right, I give up. You know where I'm going with this, right? I give up. I'll do your offer in compromise for you. And they look at me and they go, well, that's why I came in for. I said, well, all right, we'll do your offer in compromise. And I said, all right, I want you to write me a check right now for my services. I'm going to charge you $15,000, and I want it cashier's check or cashier money order right now. And they go, what? Dave, we don't charge $15,000. This is where I'm trying to make a point to this client. And I said, and they go like this, and I say, and before you leave today, I'm going to have my office manager draft a letter that says, I just gave Bernie Gartland $15,000 to do my offer in compromise, period, paragraph. He told me it will be rejected, and when it gets rejected, I will not be angry with him, and I will not ask for my money back.
They start shaking their head. What? Oh.
That's right. They go, oh, so you don't think I qualify? What have I been telling you? And see, here's the problem. We get back to those national sales organizations. They would take the person's money because they're not law firms. There's disclaimers, by the way, that they're not law firms. So they can't give the other options that are available. So they mislead the people and take the money and do this offer in compromise that gets rejected. And then you know what they do? When it gets rejected, they tell the person for another couple $1,000s, we'll do the appeals. So in any event, what is happening now is the offer in compromise system has softened.
Right. It's been revised, but still, like you said before, I mean, pretty much every single person that comes into the office says, I'd like to pay the IRS less than what I owe.
Right.
And that is not available to everybody. It's only going to be available to certain people. You're going to have to do an analysis. And like in the instance that you were talking about, if you have $300,000 of equity in some property and you only owe the IRS $10,000, they're not going to even give any consideration to an offer in compromise.
And there are other options if it doesn't work. That's the whole key. What we wanted to let you people know is there is something called an offer in compromise. They revamped it. Come and see us. We don't charge for a consultation. And Dave and I will sit down and go over all the parameters for offer in compromise and other options that you may have. This is Bernie Gartland.
Dave Wiesen.
And we'll see you next time.